one. Welcome to Unblocking the Chain. My name is Michael Pruniville and I'm your host for today. Let me welcome co-host and all-round good guy, Drew Bradford.
Thanks,
Drew,
Chris.
Yeah, good to have you, mate. You're looking very relaxed today,
I'm
Drew.
feeling good about life, Chris. Feeling good.
Yeah, I like it. Okay, in the last episode of Unblocking the Chain, we had a lot of listeners tuning in. Almost a 50% uplift on our numbers. We discussed Crypto Week, which passed the Genius Act, the Clarity Act, and also the Anti-CBDC Act. The Genius Act is effectively the Stablecoin Act. The Clarity Act clarified the role between the SEC relative to the Commodities Futures Trading Commission. And the Anti-CBDC Act prohibited the Fed from issuing a central bank digital coin. We discussed Project Acacia, which is a joint research initiative between the RBA and the DFCRC. Project Acacia explores the potential benefits of digital money and tokenization in the wholesale financial markets. We noted that Catena Digital was one of the lead projects in Project Acacia, with a CBA, ANZ, Westpac, and a host of other magnificent institutions involved. There's 19 pilots and 5 proof of concepts in Project Acacia. Finally, the big news that we covered was that Catena Digital had received its draft AFS license to issue a non-cash payments facility. I'm here today with extremely exciting news to announce that Catena Digital has now received its full AFS license to issue a non-cash payments facility for an Aussie dollar stablecoin from our friends at ASIC. This is huge news, and Drew, would you mind giving us a quick update before we introduce our esteemed guest today?
Thanks, Chris. It's a real pleasure to actually get that license and to be the first regulated issuer of a stablecoin in Australia. Look, we're on a pathway. Obviously, we're a little bit behind the states, and that legislation, Genius Act, that clears it up. The Clarity Act is actually all around market structure, and that's something that we've got to clarify here in Australia. Now, that's firmly in the lap of Dan Molino as the Assistant Treasurer here. So we're catching up with him next week, courtesy of Andrew Charlton, who's been a real friend to the digital industry here in Australia.
We love Andrew.
We love Andrew. And looking forward to sitting down with Dan and working out what the Labor Party's plans are for legislation so that we have our own equivalent of the Genius Act, which we'll call Payments Modernisation. Will be something like that. And then our version of the Clarity Act to define what is market structure going to be in Australia, what licenses are exchanges going to have, what license are actually the future license of stablecoin issuers, what's the roadmap for players in this industry. So very important thing. And Project Acacia is going to set the framework for that. And, you should have heard Brad Jones the other morning telling all the participants and the industry advisory group, this is the way forward. And he's happy to work with any of the institutions to give them comfort that the RBA is right behind a digitalisation of our wholesale financial markets, which it's awesome to have the RBA at the centre of it.
Very exciting, mate. And I must say that the cocktail night last Thursday that the DFCRC, Lizzie and Tallis put on with all of the esteemed guests there, that was very exciting, and it's all pushing along.
It is pushing along. And to have Michelle Bullock sit there and talk about that, because she was quoted out of context on about Bitcoin, which is got nothing to do with tokenization or stablecoins or things like that. But she spoke and was right behind Project Acacia.
Yeah,
so
big advocate of the industry.
Yep.
Very good. Okay, without further ado, we have a very esteemed guest here. And I know Manners has been on my back about chasing ratings for our podcast. And so it is with that in mind that we bring in this esteemed guest, an actual guest star He resides in Hong Kong. He's joining us online. He's a man who's extremely well known in digital asset circles in Australasia. He's the Vice President of Digital Assets for Franklin Templeton, the one, the only, Andrew Crawford. Welcome, Andrew.
I thought you were talking about someone else. I was actually trying to work out who this was.
This is probably my best introduction ever.
Sorry, then you sort of started to narrow it down. I was like, that sounds like me. I'm like, that can't be me. Thank you for having me. No, it's great here, and I think the timing is perfect. I think, firstly, big congratulations to Katana. I think getting that birth as the first stablecoin issuer is going to be huge. As people may not be aware, but tomorrow is the launch of Hong Kong's regulated stablecoin regime, and that's going to be going to have some serious implications. Now that we've been told that there's going to be a CNH stablecoin will be part of the issuing package tomorrow, so
that's a big deal.
That's huge for Australia. Because I think you can expect that some of these these iron ore contracts may now be done on stablecoins, not done over the bank rails, because you can do a CNH to AUD stablecoin trade at a much tighter spread than you can do through a transfer. So we think this is going to have some massive implications for trade and cross-border movement of capital.
Oh, straight on the phone to Gina and Twiggy and get our bid in.
That is one of the biggest use cases for stablecoins. That one, huge savings on the FX fees, but two, digital escrow and tracking both the content and the currency, so that you can't get contents, particularly with commodities, because there's been a few incidents over the years of commodities going missing when the payment went one way and who actually owned the commodities. Stablecoins are going to be huge in the commodity finance space.
And look, we're working with a Hong Kong fintech, and we see sort of an escrow-based system using executable smart contracts with a oracle that is validated. Because that will enable us to really shift the balance from the letter of credit system, which is primarily to the benefit of the buyer, to the benefit of the seller. Because once you achieve a certain hurdle or event, then you could get a part payment, which has been very difficult to do on an LC. And also as a seller, you don't know if that LC hasn't been hypothecated with 10 other people.
Correct.
So I think that's one of this is a classic example of what can blockchain do for you, and then what is available today that I can use it to the advantages, to disrupt the market. So we see this as shifting it from buyer to seller, and gives the seller, they know that money's sitting in that public blockchain. Say for example in a money market fund, they know it's there, and if something happens, it will be communicated to all the stakeholders at exactly the same time. There won't be any lags. There won't have to be, a request into a bank to get some information, and they'll tell me in 3 days. I could have it on an app and have an alert straight away. So this synchronicity, this is why we're going to say, this is why you see stablecoins like Tether. Each Tether is probably trading 17, 18 times a day. This is not about cryptocurrency. This is about transfer of value from one person to another, or one company to another, that's efficient and effective and fast.
Yep, and the classic thing is it's immutable and displayable. So I can know that a fund has gone from one wallet to another wallet, and I can demonstrate that. I can't demonstrate that money has left one bank account and gone into another bank account. But a stablecoin, you can show, a third party can show that payment has gone, it's gone into that wallet, there it is. And that's...
So the biggest loser of the stablecoin is that guy who said the check's in the mail.
Correct.
He's done.
He's gone.
The check's in the mail guy, he is done. that excuse is gone. So yeah, I think he's the only one that doesn't like this happening. He's just like, oh, there's another reason for I can't run that excuse up the flagpole.
Now, like Franklin Templeton have dived into this space. Now, we're
Yep.
not seeing the same enthusiasm from the asset managers and superannuation funds in Australia that you and to be fair, BlackRock, there's a few. Fidelity. So, what made Franklin Templeton go, hey, we're in this space?
We're very fortunate to be family owned and family operated. The rationale was that this is going to be this evolution. We have a vision where this business will go. And, I think this vision looked a bit blurry probably until last year. And I think last year we had a massive change happened where prior to that, I think most people saw crypto and blockchain as synonymous. What happened last year was I think they realized that cryptocurrencies are the largest group of assets that are recorded on a blockchain, but they are not the same thing. And I think what we're seeing now, and I think this has been, the US has really heightened this, is that blockchain is another way of recording ownership and a means by which you can transfer ownership between two parties. That doesn't require an intermediary, and I think that's what has interested us. And it's more efficient, it's more effective. We operate a 9 to 5 business around the when the markets are open. People now with their phones want things 24/7. We can't move the traditional system, from 9 to 5 to 24/7. We need the blockchain-based technologies in order to facilitate that. So I think that's where we wanted to, future-proof the business and better serve our clients, and service them and provide them with our expertise when they want it and when they need it, and that's primarily on their phone. And that's going to be 24/7. And that's we're just moving with the times. I think we could see that this is all about how you record ownership of an asset. It's that's the key bit of it. So it's primarily a legal construct.
That's a good segue for the next question, which is tell us a little bit about the Franklin Templeton Tokenized Money Market Fund.
Well, so there's two sort of legal systems that operate in the world. There's the three actually: American fiduciary system, and then there's the Commonwealth sort of trust law based system. We've been very mindful of developing a token which we have a chain of ownership the token holder can assert. So we set up the first money market fund in the US 47 years ago. So I think this was a natural progression for us to record the ownership of that this money market fund shares in the form of a token. So it's really just a better way of recording your ownership and transferring ownership. And then we can do very smart things like paying proportional yield to the hour rather than at the end of the day. There's some really great technology facilitates a lot of outcomes that people would have liked to have had. Pretty much like I remember when BT first launched their money funds and ANZ had V2. That was an incredible development that people could move money from a cash account to a CMT, earn a bit of yield, and then go back in. I think that's what we're seeing here, except it's being recorded on chain, and the money movement is not T plus. I think I don't know, Drew. What was BT's cash management fund? It was T plus 2, wasn't it?
I think it might have been T plus 3. It wasn't. It certainly wasn't.
It wasn't
90 seconds or whatever. Or,
yeah.
seconds.
So
it was days.
So I mean, look, we've got to get more liquidity into the market, and I think that's part of why we work very closely with OKX and Standard Chartered to bring safety and soundness, and that would give people confidence. But we need that liquidity. But yeah, I mean, moving your money from a non-yielding to do a transaction to a yielding account, and to earn the interest up to the hour, I think is pretty innovative stuff that we couldn't do traditionally because we had a custodial model. But now we're on blockchain, we can do these sort of things, and I think it's we've got a whole lot of really smart technology that gives us some tools to play with, and be creative and do things in a better way.
And this is not a new thing. The tokenized money market fund has been going for close to 4 years. Can you give us an indication of, just so everyone's aware of what physical assets underpin the fund? It really is the US government securities, etc. Give us a sense on that.
Yeah, so the SEC, and this only applies in the US. A money market fund is actually very clearly defined by the SEC. And you have to hold at least 99.5% of the portfolio in government guaranteed securities. So, the holdings are, it has to be issued by a government guaranteed entity in the US. So it's Fannie Mae, your Treasury. That's what we have to achieve in order for it to be called a money market fund. You can't do that. It's not applied. It's very strict in the US. But yeah, this is a true money market fund.
So it's almost
just US
safe
Treasury,
as houses.
mostly liquid
Safe as
deepest
houses.
market.
Yeah, exactly.
So, okay. Andrew, you talked about, so this is obviously some efficiencies. How have you found, or have you got any stats on how it's impacted your costs, what your cost per transactions or anything like that? Have you had not only a speed of has the blockchain cost side benefited you guys?
I think well, firstly, the transaction fees. We do most of our tokens are held on the Stellar network. We're doing a transaction there, I think, Paul, you might know what it is. I think it's 0.0012 cents or something. It's just
on Stellar?
On Stellar, yeah. I think if you talk about just that transaction cost, it's marginal. So that's what I refer. I don't have exact numbers, but it's a substantial saving. But it's then the indirect costs. There's no need to. You're not. It's self-reconciling. You're disseminating the information more quickly. So I think it's a lot of the indirect costs. But then then there's the benefits to the investor. So I think that we're still at a scale where we can't see the benefits of the economies of scale, but I think our expectation is that it will significantly reduce costs. We don't know exactly the magnitude, but it's going to be, I think that there's going to be, cost is not going to be the primary driver of the use case here.
Yeah, I just remember, I just remember looking, and I'd hate to think what it cost per transaction was in that old BT cash management trust. It was probably $10 or $20. But I remember doing, when I was at NAB, some cost analysis on cost per trade on just doing FX trades and swaps. The cost per transaction on an FX trade was something like $50, and the actual cost to do a swap was north of $1,000. And I can see blockchain changing that significantly to the numbers that you're talking about. It'll be cents per transaction, not dollars per transaction.
Yeah, I mean, if you look at the likes of, say, HSBC and Standard Chartered, who operate these digital FX platforms, and Orion being the one that's offered by HSBC, that's enabled them to effectively have all their ledgers unified, and maybe the money doesn't actually move from one place to the other, but the ledger transaction does, but they still charge their FX spread and their fees. So yeah, I think there's a lot of, but moving to one ledger, a single ledger, does remove a lot of inefficiencies, which I think that partly manual processes, but I think it's that reconciliation that does end up costing a lot of that incurs a lot of cost,
a lot of time. It's a lot of people have to do that. Yep.
Yeah. Okay, so
but it's definitely changing. Look, I can move, if I wanted to, say I was going to China today, I could move 100 Aussie dollars, 500 honky, to China with Alipay on an app, and they will do that at, I think, a 4 basis point spread to. So I'll be doing that at institutional rates, and it'll be a 4 basis point spread that they'll charge me to move, 100 Aussie dollars. Not these enormous fees that the banks are, not only are they charging you an admin fee, but then there's the hidden fee, which is the spread. And that's
NAB
usually
charges.
most of it.
Yeah, NAB charges more than 4 bips to do an FX trade. I can assure you.
Yeah. But that's this this group Alipay or Alibaba out of China. I mean, they have been very smart in this is all ledger transactions, and when China's announced recently that tomorrow in Hong Kong they'll have this the CNH stablecoin. They see a manufacturer in China having a direct relationship with the client, and maybe that client may choose to pay in CNH stablecoin rather than US dollars or Aussie dollars or Kiwi dollars, whatever they use. So this is a part of a wider, liberalising of trade down to a much lower level at the same cost that institutions were paying. This is like Franklin Templeton started by taking what was happening on Wall Street in the same vein as Merrill's, and enabling people to get access to Wall Street type skills and expertise in Main Street. And I think we've seen this massive transformation with cross-border payments, and I think stablecoins are going to drive a lot of that. I think the person that goes down to the bank and takes $100 and exchanges that into the currency of their destination is getting robbed.
Absolutely.
That's just not going to happen. And there's no reason why, when you're in Bali, the technology's there that the Balinese vendor or shop could accept your Aussie stable coin, and there may be a spread, but that will be marginal compared to what you would have paid going and getting
to get your repairs.
Yeah.
It just removes the whole settlement and credit, and absolutely.
Because the whole thing about Web3 is establishing trust without a centralized authority.
Correct.
And it's if I'm the buyer, I need to establish trust with the seller that my money is good. And then, the seller has to establish trust to me that they are going to provide the good to me or service. In the past, we've used Amazons, the likes of, banks, whoever it is, intermediaries. We don't really need to do that. You've got the good, you own the good, you have the right to sell the good. I have the money to pay for it. We agree on a price, and I transfer my value and you transfer your good. This is all about establishing trust so we can, Web 1, they pushed information down to us. Web 2, we had something like Facebook or a central authority that we could publish to, and then they would publish back. This is actually, we now go from user to user. So, I think the old days of the MasterCard or Visa, where they effectively validate that you have the money in your account and they will pay the merchant.
At maybe 30 days later, though.
Yeah, but why do the client's sitting there and they've got the money in their account? Let's move it. By the time I walk out the shop, they've already got it in their account.
Exactly.
It's not going to, in places like the Philippines, where it was very hard to get a bank account, the merchants were charging exorbitant fees of around 8% by the credit card companies. Here comes this, startup with QR codes. Suddenly, every merchant in the Philippines, if you ever go to a shop in the Philippines, you'll see the ATM machine or the card machine, and they're like, oh, no, I want to use MasterCard. They're like, oh, no, the battery's run out, but you can use my GCash QR code because they're paying 0.05% for that and 8%. And I don't think I've seen one of those, I don't know what you call those.
It's a terminal, merchant terminal.
I don't think I've seen one of those that's working. They're all buried away because they're like, why would I pay 8%? I just want to get value.
Andrew,
this is what we're seeing happening.
Yeah, look, I was in Argentina recently, and the guy was telling me when I pay with a Visa or MasterCard, he does not get the money for 40 days, right? And so they've got inflation at the time was running at, 200%. So that it was 25-30% a month inflation, and so he's getting, taken for a ride on that payment settlement time.
And people travel a lot more, and they do. The world is a much more global economy. I mean, we've sort of had this rather insular, myopic system that now has really not moved with the times. There's no reason why if I'm in Argentina and I'm buying something from Hong Kong, why do I need to go through a banking channel? If I can establish trust with you and vice versa, why do we need these intermediaries?
No, it's account to account is the thing now. It's not via a set of rails. Payments are going to go account to account. The stablecoins will get us there.
Peer to peer.
Yeah, there's a lot of middlemen that are going to have to reskill.
Yes.
Yeah, that's right. I just wanted to shout out to the team at NAB, who I mentioned before. Jezza and the team there look after Jelly C very well. So we mentioned them before. I want to say g'day to the boys. Very keen listeners on the podcast. But Andrew, I want to summarise because we've talked about the tokenised money market fund. It is one part of a triangular agreement. Franklin Templeton are the first entry point. So, for instance, for a fund like Jelly C, one of our funds, we invest US dollars into the Franklin Templeton tokenised money market fund. Then that is converted into iBenji, and the iBenji pays interest, on an hourly basis, and hopefully it'll be even more frequent than that at a point in the future. That it gets custodied within Standard Chartered, and then from Standard Chartered, it is collaterally mirrored over to, for instance, OKX. So this particular program gives us the ability to be able to do all sorts of things. Mm-hmm. And it gives us a institutional framework. Can you give us a sense on how, or firstly, who was the architect of this program, and how did it all come about?
So I think the architect, the architect is definitely Paul. OKEX are very fortunate to have Paul on their team. He's a very smart and very modest gentleman.
This is Paul Oscar Goldman that we're talking about.
Goldman, yeah.
Who owns 4 lawnmowers and a number of other things.
Lots of macadamias.
And a pedigree, another guy with a pedigree at Bankers Trust.
Yeah. If you were, say, for example, a fund manager, like Jelly C, and you had taken investors' money, and you could not get access to that money for 2 years, you might as well shut the doors and you're done. So I think we saw that there was a need, and on the other side, I think and Paul's FX guy, and I'd come from a hedge funds background. I think he came up with the idea: why don't we take the trilateral and apply it here and see if we can do it with So yeah, he's definitely the architect. So he gets all the credit. I think I was very fortunate that Franklin could see the vision and see what that meant, building that infrastructure in, because these exchanges are not like the ASX. They are not semi-government, abiding by rules, as we know, the ASX is. These are, I suppose, more of a private exchange. So I think that in order for investors who were taking money from other investors under a trust deed or whatever, they wanted the comfort that if something went wrong with the exchange, they would not be exposed. And I think this is where we started working out the formative pieces of the trilateral arrangement, which now is exposed that there's so much more that you can do, because you've got your assets are safe and sound. They're custodied by a 175-year-old bank. There's mechanisms in place for money to move from one direction to the other. I think that will give people, a lot of people want the vol that's, offered by crypto. And there's a lot of investors who like that vol, but they don't want to take a business risk in order to.
They're happy to take, right?
They don't want to take a credit or a business risk. They're happy to take the investment risk, but you don't want to add the other two layers because they're too hard, and they're especially if you're taking money from other investors under an MIS, there's just too much culpability. So I think this was designed. And I think one of the things that we have to be mindful of in crypto or digital assets, we get all excited, but we've got to operate within the rules of the road. And the good thing about this program was that it does sit within the rules of the road or the regulations in the various countries. But yeah, I think it gives a lot of safety and soundness to investment managers, so they can just focus on what they're good at, and that's getting that alpha out of that vol.
Yeah, look,
Not worrying about operational risk. That's what they want to do.
absolutely. We've got to get a note. We've got to get Paul Goldman on the show.
Yep.
Yes. Oh,
We'll have to do that.
it's tough to get a hold of, though.
One of the things, and this will be an interesting space to watch, because we're seeing exchanges like OKX being quite innovative. And you touched on then that, not that the ASX is government owned, but if you look at, you've only got to open up the FT and how the London Stock Exchange is sort of slowly, it feels like dying. The traditional exchanges, it feels to me like they're going through a bit of a Kodak moment. They're hanging on to the film when the actual underlying industries are going digital, and OKX is being very innovative here on this, and some of the other exchanges also super innovative. It'll be interesting to go forward in 5 years' time. I can see the digital exchanges taking over they'll be the ones buying, because traditionally you see traditional businesses, when someone gets innovative, they buy them up, right? And I can see this flipping on its head, and the startups, the digital exchanges being the ones that are start taking out the old traditional industry.
I mean, Coinbase is trading at 28 times its revenue. So is that 97 billion? 28 times its revenue, and
The ASX is not.
That's exactly right. Kraken just doing a raise at 15 billion, so their revenue is about 1.5, and that's just a placement before they.
Well, OKX's revenue is probably bigger than both of those.
Well, OKX is could be something very big. We know Binance is around, what was that,
17 billion.
17 billion last year. So you've got some heavyweights coming into the market, and it certainly makes sense from OKX perspective to target the institutional set before they IPO, and they've got a great footprint here. They're licensed in Australia, they're licensed in Singapore and many other jurisdictions. So I think you've picked Franklin Templeton have picked a good partner there. So that's positive.
Yeah, I think we had it was a big experiment. I mean, we've got I don't know if anyone's ever. Standard Chartered are very, very conservative. That's wwhy they've been able to operate in developing markets for 175 years. They're very good at what they do. We're 75-year-old family-owned business. OKX I think's been going for 9 years. We come from a very risk-managed, risk-controlled compliance culture, which is very driven by the regulations and laws. Whereas, crypto hasn't had, digital assets haven't had that structure around them to date. But that's why we're seeing things like Acacia as the government trying to work out what are the regulations, because there is this fundamental shift away from a custodial system where you have people go to ASIC, you get your license, and then ASIC say, we'll get a trustee to manage your trust deed. We're effectively outsourcing our responsibility to them. But if you do something wrong, then we'll enforce it. We don't. The trustee custodian role doesn't sit here. That now is sitting with a couple of gamers sitting in Korea or in the States who are validating the transactions that has not occurred on this blockchain before, and yes, that should be validated, and that block should be added to this chain. This is a whole different model. We're going from a sort of custodial model built around trust law to a nodal model built around validators, determining what should and should not happen with the transaction. So this is a big change for regulators and people to understand, for them to get their head around. But it is
looking forward to it all. The next few years are going to be very, very interesting. Very
exciting. And can I just say, Andrew, you've been talking at a very high level, and it's absolutely brilliant. We have a young subset of listeners, young punters in their teenagers, in their teen years, and I just want to sort of bring it back and simplify what we've been describing. So it's really for a year 5 student in primary school. It's like in the old days when we had a CBA Dolomites account, where, for instance, they would deposit money and earn interest in the Dolomites, and they effectively would be able to use that Dolomites, so the money that they've got in there, to buy things like equities or bonds or those sort of things. So other things. You can use your deposit to buy other things. Simplifying it as best as we can, that's exactly what we're looking to do. We have our cake and we're able to eat it as well.
There's no point in having cake if you can't eat it.
But Mike, it's going to be on turbo. I mean,
yes.
So
that times
we
1 million.
We got the cherry on top. Here we go.
Yeah. I mean, look, it's when we've invested now, the only tangible benefit we get is a return. And I think what we're going to see now that we've got this ability to, I suppose, take a lot more information and extrapolate from that. We see that there's going to be, and this is things we're looking at doing and bringing to the market, is non-financial returns. So I've got my financial returns that I'm getting. What impact am I having on the environment? What impact am I having on society? Those ESG. What's my return? Am I doing better than others? We see that the non-financial returns are really important to people. I'm getting some good, but I'm not just me. I'm actually doing good for society. So we see that concept of non-financial returns key. The other one we see is that there should be rewards or benefits, by association or participation. And I think that's what we've seen a lot. The way that the crypto companies are owned and operated is totally different to the traditional proprietary limited. It's much more consensus driven. You participate, you can get paid in the currency of that, DAO. We see that there's sort of, having rights like rewards and things coming to you if you participate, whether that's buy, contribute, help. So it's a much more robust experience. It's not just the paper-based return. You get, your statement, you look at it and go, wow, yippee, I get my super each year, it's up this. This is actually, no, I've done this for the environment, and I might have got some preferential, access to something, or being part of a community or a group. So I think and this is all going to be facilitated behind, you're going to sit behind a zero knowledge proof type structure, which will ensure that you've got sovereignty of your data. You're not going to sell yourself to a mailing list. Your data will be sacrosanct behind that wall. So that will enable us, people to extract more from you, but actually get less from you. So I think this is going to be. There's a lot more power than just this is like a share certificate with benefit after benefit after benefit. I think that it's just going to be more tangible to people. I think that's been the big problem. It's just been this statement you get in the paper, in the mail. Now it's going to be, okay, so I'm doing some good in the environment. I might even participate in a project that has been sponsored, to do good. So it's a lot more participatory and a community centric, which I think, it doesn't have to just be a financial gain.
It's the vibe. It's Marbo. There's a lot of goodness involved, Andrew. There's for everybody.
Look, the system is developing to how most people want it to be. And I think most people want to be part of a community. They want to participate. They want to have a role. And I think what this, it came about as a whole lot of people that were sort of a bit anarchical. I think really now what we're seeing, the way that digital assets are evolving is to what the community wants. They want to be, it's like with banks, we used to have passbooks. Now we go and get money out wherever we want. If I want to sell my shares at 2 a.m. on Saturday, I'll sell them at 2 a.m. on Saturday. And I should get the value done. I think this is just people, it's aligning. And I think that's what's important for us. We want to align our business with what our, to suit our customers or our clients. And I think that's why using this technology to align them to what their goals are and to get them to their goals, I think that's key why the technology is so important.
Brilliant, mate.
But we're only at the tip of the iceberg. There's so much so much opportunity. But Oz was way behind. I mean, I came down last year and I was like, I could not believe how far behind it was. But now, I think the new Albanese government really looks like they're going to make, some changes and align with the rest of the world, which has been, pushed by the US. And whether it be in these stable coins, Hong Kong tomorrow, Korea's not far away, Japan's not far away, Philippines, Thailand. This is going to be the way money moves around this APAC. And then, obviously the US will come very soon. This is going to be a whole different way people move money. It's going to be transformational. So, it's good to see that Australia's got into the game. But yeah, Drew and his team are very lucky. They're a very smart team, and they're gonna they definitely pick the best people. And so I think it's gonna be the use cases, what they are in 3 years. I don't think you will have any grasp of what it'll be. Where people will be using this, but it'll be huge.
Very good, mate. Very good. I'm getting a look from Menas, who once again has been quiet as a church mouse. He's telling me to wrap it up. So, mate, I guess the last question I'd like to ask is, what does Franklin Templeton look like in 3 years' time, and what does success look like?
Well, I think we would see ourselves as having a role in this transformation. We've got 75 years of experience. We've learned a lot. We know a lot about what we do, and I think we want to make the lives of our investors better. So I don't know where we're doing trade finance at the moment. We're doing so many different things. I think it just getting, I suppose, disintermediating is going to be disintermediating inefficiencies that we don't need to tolerate any further. That would probably be the key thing, and making, movement of money and value between people much easier and less friction and less costly and faster. Like Drew was saying before, 30 days to get paid in Argentina and inflation at 20%. That's just a killer. So I think, that mismatch of liabilities is also, there's so many, it's hard to say. But I think, for all the Aussie tourists that'll be taking their Aussie stable coins on tour, they'll find that they've probably got an extra 10% to spend on holiday. So that's got to be a win.
Yeah,
absolutely.
We know we spent really well. But I think that's a big win for a kid who's, if you've been doing a job, getting through uni, working after hours, busting, to get, save up to go overseas, and you got a free extra 5-10% in your savings. That's a win from my perspective.
Absolutely, mate. I'm excited.
Yeah, no, it's a very exciting time, and thank God Australia's back in the game.
Absolutely.
Andrew, it's been a pleasure to have you on.
Thanks for having me here, guys.
Absolutely magnificent.
It's not raining here today. It's been pouring all week. It's so hot.
Yeah, very good. Drew, you're looking good as always, mate.
Always good. Feeling very happy with what's going on at the moment.
Very good. Thanks to all the punters out there. Thanks to the listeners. We're aiming for new highs, and Menas, you've done it again. Thanks, everybody.
Thanks, guys.
Thank you.